Good evening, everyone. So in my presentation, a lot of it will probably sound familiar, both from some of the things that Marshall has touched on, but also from our quarterly report that we did last month. So as he said, I'm the Deputy Director for the Financial Administration, and I've been with the city for over 15 years. So we'll go ahead, next slide. And as Marshall said, we're one of the 5 divisions, so we're watching the money coming and going and trying to keep everybody running here. Next slide. Here's how my group is organized. As Marshall said, our main areas are like the financial operations and the billing, but we have a few others, the admin support and some other things going on in our group. And so there's about 30 of us. And instead of going through the org chart, I wanted to show you some pictures of my staff. So next slide, please. Here is our financial operations group. Gail Thrasher is our manager for this group. So they are responsible for the budget and finance, as well as the accounting and accounts payable and some of the other things that go along with that. I do need to get an updated picture because we do have a few changes in this group, but that's our financial operations group. Next slide, please. Here's Fernando Randa. Marshall talked a little bit about his responsibilities. He does look at all of our rates and fees, so he is really helping us determine kind of what our future looks like as far as revenue goes. And it's a kind of an unusual position. You only typically see this position in like larger utilities. So we're very fortunate to have him to help us with all of our financial planning and the rates and fees and our cost of service as well. Next slide. Here's our customer service and billing group. Michael Valderas is the manager for this group. So they're taking all of our customer calls. We have around 90,000 customers. They're helping to manage the delinquent accounts. And they also took on a little bit extra this year with the COVID, and there were some changes in the city, and they have actually been helping to manage the Access Aurora group as well. It's also a call center. It's where people call. If you don't know who to call in the city, there's a group that takes those calls. And so they've been helping with that. So they've taken on a little extra this year. And they also have a couple of big initiatives going on. We have a big implementation for our billing software, and then making some other changes along the way as well. Next slide. This group, Melissa Touring and Kristin Loveless, it's a little bit of a unique group. They kind of help us look at some of our business process and help us get ready for some of our IT projects. Some of the big initiatives that they've really been working on hard lately is helping with how we use our SharePoint, as well as looking really at how we do our document management and some of our information management. Next slide. Then here we have Carol Jacko. She is the supervisor for our administrative support and some of her staff. So they help keep us all very organized. They take care of a lot of paperwork for us and manage our calendars. So we really appreciate all the work they do for us. Next slide. So I thought I'd give you a little bit of an overview of what did 2020 look like more from an accounting point of view. So we are the third largest utility in Colorado. And these numbers are combined for the water, sewer, and storm. And 2020 has not been audited yet, so these are not final numbers. But essentially, we ended up with about $285 million in revenues. 136 of that we used for operating and maintenance expenses, and about 104 in construction projects. Our population is estimated to be around 380,000 people. I mentioned we serve about 90,000 accounts. Last year, our peak day was at 95 million gallons for the day. And if you compare that for the 4 previous years, we never went above 90. So it definitely was a warm season, and there was a lot of water used. We have about $2.5 billion in assets, and that is net of depreciation. We have $428 million in debt that's outstanding between the two utilities. our debt service coverages. I didn't recalculate these. I think they might actually go up a little bit because we did have more revenue than we did anticipate. And then, as Marshall said, when you look at how we compare in the region, we really do feel like we're pretty affordable for the region. Next slide. And Marshall kind of went into this about us being an enterprise fund and how that came into being. And you probably are all familiar with our TABOR, which really did have some constraints on some revenues, and it was tied to expenditures, and there were restraints on how much those could grow. So with us being in an enterprise where we run more like a business, and so we're covering our expenses, we are fortunate in that we don't have to comply with some of these things that TABOR does require. Next slide. And so I think Marshall covered a lot of this. We're not competing for any of the general fund tax revenue that's coming in. We set our rates and fees. We make sure that we're not adding any profits into this area. We really are truly covering our costs. We're able to issue the bonds without voter approval, but we also still fall into a lot of the city processes. So for instance, with the budget, we are required to have a balanced budget, and we work with the city through that process. Next slide. The budget area is probably one of the biggest areas that we work on. Like I said, we see that money coming and going, and we're monitoring it constantly. And when we're building a budget, we start with our expenses. We look at our operating and kind of forecast how much that's going to change for the year. We look at our capital, where we work with our engineers and that group a lot, and not only looking at current capital needs, but more long-term as well. And then what are we doing for debt? And it's not only the debt service, but also thinking about, do we need to issue more debt? So then once we have kind of our expenses determined, we then go look at our revenues to cover our costs. So we're looking at our operating, which is mainly our rates, but we do have a few contracts out there that we also collect revenue from, and some service fees. And then the big one is the development fees, and that's one that's really has a lot of variability. The last few years, it's been going gangbusters, so we've collected quite a bit in development fees. But we also have had years where it's fallen off. So it's one of those that it's kind of it's big or it's not. So it's not always very predictable. And then as we are looking at those revenues too, we do look at our cash position, because we do have some policies around reserves that we want to make sure that we are maintaining those as well. Next slide. The operating budget, Marshall touched on this a little bit. For 2021, our operating budget is $151 million, and that's covering our day-to-day expenses. So our people, our supplies, our buildings, professional services. And one thing about this budget is it does not carry year to year. So each year we are looking at that budget and building that depending on the year. Next slide. Then we have our capital budget, which is pretty good size for 2021. So this $230 million does not include what projects were already going. So that's what's unique about the capital from the operating. The capital budget does carry from year to year. So if a project hasn't finished, that budget is still there available until it finishes. And sometimes it's a little tricky trying to time the budgeting for capital. So sometimes we'll have it in there and not all of the upfront work has been done. So it might not get started in the year that was budgeted. It might actually get started later. So then really the big project in there for 2021 is our SEAM project, building both the facility as well as the interceptor. So I have those listed in there. And then another area that we can't always predict is our water right purchases as well. For 21, we put in $10 million, but we know our water resources staff have been working really hard, and they have a lot of deals going, and they're predicting more like it'll probably be around 40 million that we're actually going to spend in 2021. Next slide. So when we're talking about debt, to kind of go into that a little bit further, when we're looking at the projects, there are a number of things to consider. We are looking long-term. As we said, we have a financial model that Fernando maintains for us, and we look at that to see how our cash balances and our revenue, we're going to predict them. And then, do we need to issue any debt? And sometimes it's a matter of, you know, who should be paying for it? Should it be our current customers? Should we have some of our future customers paying for some of it, because it really is for some of our future customers that we're really building the project. So there's a few things that we take into consideration when we're looking at debt being issued. There are two main types. Obviously, there's other programs out there. There's government programs out there for some other loan possibilities. But mainly what we've used in the past is either a direct loan or issuing the revenue bonds. We've done direct loans for some of our smaller projects. They're nice in that there's not a lot of requirements around them, and the funds can be made available fairly quickly. The downside is it's one bank issuing, so how much they're willing to lend is probably not as much as if you would go out into the bond market. When you're issuing bonds, especially if you want them to be tax exempt, you definitely want to be aware of the regulations that are around there. There are a number of IRS requirements as far as how soon you can get the bond proceeds spent, as well as arbitrage. They don't want you issuing debt and then investing it, because you could make more money in your investment from the interest than what you're paying on the bonds, which in today's market, that's probably not an issue, but that is one of the regulations that is out there. What we currently have for outstanding debt is in the water fund, we have 392 million, and in the wastewater, 35 million. And as Marshall was talking about, for the SEAM project, we are working on a debt issuance right now. So it takes a few months to get through that process, but we are planning to have debt issued to cover the SEAM project and a few other projects that we were working on as well. Okay, next one, the revenue. So we talked about, you know, now we have our budget for our operating and our capital. So now we look at our revenue. Next slide. One of the big pieces to determine our rate revenue is looking at a cost of service. And that's where we're really looking at how some of our different classes are using our system. So how do the residential customers use it versus a commercial customer versus an irrigation customer? So we really do allocate the expenses based on how the different classes are using our system. And so then we allocate the costs accordingly. So it informs how we want to do our rate designs, and it also informs us obviously of what kind of increases we will need, and if we're increasing, how we are going to do those increases. We typically will, as we're doing the budget process, say that we're doing an overall 3% increase. That doesn't necessarily mean every class is increasing by 3%, because it may have been a change in, you know, if we have a difference in some of our commercial users and maybe they're using more of our system now, they might have a 4% increase versus the 3%. Next slide. So as we talked about, our rates cover our day-to-day, as well as making sure that we have our required reserves and restrictions for cash on hand, and we do not build any profit into our rates. As far as our rate history, I just wanted to kind of touch on this a little bit. We kind of had a history where we just kind of had a cost. We did not have any tiers. And then as we were building the Prairie Waters, we were looking at how we were charging. We created some tiers. And you also see there in 2009 and 2010 where we had pretty significant rate increases. Then we went from 2010 to 2016 where we had no increases. And at this time, we were looking at needing to do some increases, and we were also looking at our policies at this time. So one of the things we put in our policies in order to protect both us as a utility and our customers, we put in our policies that we wanted to have more steady and smaller incremental increases as opposed to having these big spikes in the increases. And we also felt like maybe we do the increases every other year to help people work things into their budget. So we started with that first increase in 2017. The increases we wanted to keep between 3.5% and 5%, and we've been pretty successful at that. And then 2020 came and COVID hit, and so we didn't feel very comfortable proposing an increase for 2021. So we did the increase in 17, we did the increase in 19, and 21 we chose not to request an increase. As things are looking now, we are planning to look at an increase in 2022. Next slide. So the connection fees, Marshall talked a lot about this. This is a one-time charge when people are connecting to our system, or sometimes, especially in commercial businesses, sometimes they'll be increasing the capacity that they need. So this is really paying for your buy-in to our system. You know, as we are growing, the developments, they need to be paying for their piece of the system, and it's really kind of a demand and capacity fee that we are charging. Next slide. There are definitely some things to consider with connection fees or development fees. It's interesting, there are a lot of interchangeable words that you hear when we talk about these fees, but they usually typically have to do with development. So there are definitely state laws and regulations in how you can charge the fees. You definitely have to make a connection to the cost of your system, what you're building, or if they're buying in, maybe there's some capacity that you already have. You definitely have to make a connection between what you're charging and the cost that you are incurring. So obviously, we're talking a lot about future development. So we don't know the exact cost, but we can make reasonable guesses. And it is important to realize these are fees and they're not taxes. So that's an important part of the state regulations. So our fee, we broke it down when we did this study. And so we take into account all the different pieces, and then we come to a total of how we charge. So you can see the water resources fee, that's what costs for water. The source of supply is mostly storage, and we have our treatment and some various costs there. So then we get to the total of the $63.62. So what we do is we look at our customers and see what an average day usage is, and then we charge them for that average daily usage by the $63.62. Next slide. So this is just a reminder that rates and fees pay for different things. Sometimes people use these terms interchangeably, but they really are different, and we really have to account for them differently. So your rates are your daily operations kind of costs that are being recovered versus your connection fees that is really has to do with development and growth in your area. And so then my staff, along with creating that budget, spend the rest of their time monitoring that budget. So making sure all those pieces fit together. The financial policies, we touched on this a little bit when we were talking about the quarterly memo last month. Greg, can you push it? Because there we go. Thank you. So here's what's in those policies from a financial point of view is we have our debt service coverage ratios. So you see that we have them with connection fees and without. Like I said, those fees can vary a lot. So we do want to see how do we look when we include those fees, but we also want to make sure that we're in a good spot if those don't come in, those fees don't come in as we expected. We want our debt to assets ratio to be no greater than 50%. We want to maintain some good cash balances, so we have 500 days of cash on hand. We have our operating reserve of 90 days. We have a capital reserve where we just do 0.5% of what our capital assets are. If you look at some other utilities, and a lot of places will have this capital reserve, usually this will be a little bit higher, but our system's so new that we don't typically have some of the catastrophic emergencies that other systems may have. Then the water resources reserve is also kind of unique to us because we know that we still have a lot of growth happening here in Aurora, and we know that we need to be ready for these purchases as they come. So we do have 20 million set aside specifically for our water resources group to use if needed. Then for debt service reserve, sometimes with debt bond issuance especially, you'll be required to put have a debt service fund specifically holding that money. But sometimes we don't. And with the last bond issuance that we did, we were not required to have an escrow account, but we felt it was still important to have a debt service reserve. So that is one of our reserves. Next slide. So this is what you saw in the quarterly report. These are the reserves. In the chart that you had, it also had some of our other commitments. These are just specifically the reserves. And I did want to make sure that I talked about how we calculate the operating reserve, because I did not answer Jay's question correctly on that last time. So when we are looking at the operating reserve, we look at our adopted budget. And if you look in our quarterly report, the adopted budget is not what you're seeing. You're seeing what we call the working budget, which has adjustments. For instance, we have a supplemental a couple of times a year, so we make adjustments to that budget. So it's not necessarily what's adopted, but for our reserves, we just go with the adopted budget and we don't change that as we change the budget. Okay, next. So as far as the utility goes, our financial health, we are very strong from a financial point of view. We are well funded. We get very good reviews from our rating agencies. The last time we were rated, the water was rated AA+, and the wastewater was rated AAA. But right after we had that rating done, we refunded those bonds. So we went to a direct loan with those. So our wastewater hasn't been looked at since 2016. As we are working through our debt issuance this year, we will get another full rating from the rating agency. So I'm anxious to see where we end up with that. And we are able to maintain those reserves that we've talked about. So all of this financial information, obviously, like we've talked about, we're part of the city. So when we have our annual financial reports, all of our information gets rolled up into those as well, and along with the annual budget. And so we have our rating agencies, our citizens, our investors, and our staff all use this information in various ways. Our bond investors, we usually don't hear much from them. Our rating agencies, when we have bonds outstanding, will check in with us usually annually. We do have one investor, Schwab, tends to call us every year and asks us some questions. So it just depends how much they're interested in digging deeper into the information. Next. So what you can expect to come to the committee from my group is the quarterly financials we talked about. We also bring the proposed budget. So in a couple of months, we'll be coming to you and talking about what our plans are for 2022. And then as we make changes to the rates and fees or our programs or our policies, we also will bring those to the committee for review. And I think that's it.